Well, you like the panel out there might be worried that things have run a little bit too far, too fast. But our next guest is eyeing some opportunity in names that have rallied hard. It's time to go off the chart to Todd Gordon of Ascent Wealth Partners. Todd, what are you looking at?
Hey, Melissa, first, if we could start with the indexes, let's talk about first earnings. We see signs that they're bottoming, recovering. Obviously, stating the obvious, the stay-at-home, work-at-home names in Q2 and the NASDAQ has exploded. But in the NASDAQ, is it overdone or is it in bubble territory? One indicator I watch is average range. To get a little technical here, but you normalize it with percentages so you can compare apples to apples. And if you take a look at the trailing 20 months in the NASDAQ, the average month-over-month range over the last 20 months is 9%. Compare that to the tech bubble of 2000, it got up to 15% before we started to turn lower. So in terms of vol expansion, as Guy was just saying, we're still a ways away from that in the current bull market. So we believe a reopening is occurring here. You should see signs of that in Q3, Q4 earnings. We look at the S&P. Let's look at where we are there, tech aside. You've seen two major corrections since the credit crisis low. This one you'll notice is different. The prior two corrections were sort of consolidating volatility contraction. This one is tracing, guys, higher highs, lower lows. This is expanding volatility. That's why I think we're starting to see a mean reversion from a very low volatility range moving up. So we should actually continue a higher VIX. That doesn't mean that the market has to sell off. So with that range, close above 3,600 in the S&P on a month-over-month basis, would actually say the S&P correction's over. So we're cautiously optimistic, very accommodative Fed, and as you guys are mentioning, hopes for a vaccine. So one name that's no surprise is Zoom, very overbought. We trimmed a portion of the position yesterday. We bought it in March. It's run into parallel channel resistance on the weekly chart. We're still bullish the story with the new work-at-home dynamic. I think it's our reality for a while, even if COVID retreats. I think Google Meetings and GoToWebinar and those they're not really gaining market share. So we still like the Zoom name from the corporate side. We have a lot of stay-at-home stocks, Zoom and Peloton and others, but we don't have a lot of COVID names in our portfolio now. Not ready to dip our toe in yet. Not so in the airlines, hotel, or travel. One name that we did add yesterday that we have held is Disney. We don't think it's overbought or oversold. We did close Disney in March, but we just reopened the position yesterday. We think you can fall back on streaming, strong library of content, movies coming out, competing with Netflix. And if you look at the gap Netflix has created over Disney, it might be a little bit of catch up. And if the parks reopen with a vaccine, they're going to regain a lot of lost revenue.
All right. Thanks, Todd. Good to see you. Todd Gordon, Ascent Wealth Partners. Which do you like? That wasn't a would you rather. Which do you like? Bonawyn, Zoom or Disney?
In terms of a company, I'll go with Zoom. Go with Zoom. I mean, Disney, honestly, I need to give credit to Tim. He's the one who's called this. He's been early to this thing. I'm inclined in terms of what I expect to be the short-term participant to the upside. I expect it to be Disney only because it has a multiple that I don't need Guy's slide rule to pull out and calculate. But I think Zoom is going to be more of a mainstay, but you're seeing some profit taken today, and I would probably get in a bit lower.
Guy, and your slide rule, what do you have to say?
I love my slide. I mean, I take it with me everywhere. It gets painful at times, but it's wonderful to have, especially at times like this.
Especially when you sit.
B. Icebreaker for pointing that out. I think Zoom, if you look, I mean, we talked about it yesterday. The quarter was extraordinary. We didn't say anything negative about the quarter. What we said was, and Dan brought this up, you look at the revenues they're going to do, $2.5 to $3 billion of revenue, and you're talking about a company that's now, yes, at least yesterday, at a $129 billion market cap. I mean, the math doesn't really add up to whatever growth you think is going to happen. Disney, I understand the reasons to be bullish Disney, especially now if this news is true. 150 was the level I think it topped out at back in December. But I'm more inclined to think Zoom is going to go down back, testing the low 300s, then Disney is going to get back to that 150 level.
All right, and let's check out shares of Tesla posting their worst day since July. That's after more than a 4.5% drop yesterday. As momentum coming out of this stock, and of course, Tesla announcing the biggest capital raise here. Karen, I don't know what you make of this. I know that the bonds went up, which makes sense.
Mm-hmm. Right. I think it's a really smart thing to do, right? I mean, it seems like it's been a couple of months, at least 4 or 5 months, since the question about their balance sheet has kind of been put to rest. But I think good for them for taking advantage of this crazy market to really shore up the balance sheet. That makes sense. That's a smart thing to do. In terms of the message it sends to the market, is Tesla expensive here? The market doesn't seem to believe Tesla when Tesla says its stock is expensive, as we saw when
the CEO
Elon said that. I don't know, what was that, 700? When did he say that? Maybe 700 or 800 in there. I can't even remember anymore. But I mean, a little bit of froth should come off of that and Apple. I think it was somewhat of a buy the rumor, sell the news on the split.
Yeah, and of course, Bailey Gifford coming out with a filing saying, trimming their position, but saying that they remain a long-term shareholder in Tesla, believe in the company. It's simply portfolio rebalancing because of the weight Tesla took because of that run there. So that contributed to this downward pressure. But still, does this sort of represent, Bonawyn, the momentum, especially in a day like today where we saw cyclicals really outperform some of these growthier names? Do you think this is a permanent state here in terms of this shift?
You know what? I don't, and I'll tell you why. If you look over the last few days of trading, you've had a month in, so there's going to be a lot of rebalancing, kind of reallocation that comes along with that. So when we're seeing some of these rotations, or what we're calling trends, I'll call them rotations, I think some of them tend to be a bit short-dated in nature. So it would take me a bit longer to observe trading over a long period of time before I'm willing to say, okay, we've seen a full rotation and I expect this trend to continue. In fact, honestly, I'm a bit skeptical about the fact that we're past the worst with this virus. I think flu season's coming up, the winter's coming up. We might see a retrenchment of that virus, and I would expect some of this to come off actually from the highs.